Ever heard of the short strangle strategy? It's for when you expect a stock to chill out. Here's the deal. You sell an out-of-the-money call and an out-of-the-money put. Both options have the same expiration date, betting on low volatility. If the stock stays calm, you profit from the premiums. But remember, it's not without risk if the stock moves big. So, are you ready to strangle the market, or will you let it strangle you? First, sell it out of the money OTM call. Then, sell an out-of-the-money OTM put. Both options should have the same expiration date. For example, if stock XYZ is at 100 funds, sell XYZ 100% MAV call and 1XYZ 95. But you collect premiums from both options. This strategy profits from minimal stock movement. Let's talk about profit and loss in trading options. Maximum profit is capped at the total premium received. This happens if the stock stays between the two strike prices until expiration. Maximum loss? It's unlimited on the upside due to the short call, and substantial on the downside, limited to the strike price of the put minus the premium received. So, know your risks and rewards before diving in. Understanding break-even points is crucial in options trading. Let's break it down. Upper break-even equals the call strike plus the total premium received. Lower break-even is the put strike minus the total premium received. These points help you know when you're in profit or loss territory. It's like having a roadmap for your trading strategy. Remember, knowledge is power in the trading world. So, calculate those break-even points before making a move. Stay informed, stay ahead. And if you're ready to dive deeper, I'm about to share the ideal market outlook with you. It's neutral with low volatility. We expect the stock to stay within a defined range. This means stability and predictability, perfect for strategic planning and steady growth. Are you ready to navigate this calm market? Let's make the most of this opportunity. Whoa, did I just bet the farm on this stock? Oh, right, I did. Every single time. Here are the risks silently lurking. Stock swings. That's a roller coaster I didn't sign up for. Margin calls? Yeah, those are knocking at my door. Uncovered options? More like uncovered stress. Not tracking risks? Same. Until I realized my portfolio's more volatile than my mood swings. Tag your "I'll be careful next time" friend. Your future self will thank you for the caution.